welcome back to Cheddar's opening bell. Homebuilder confidence has fallen to a 7-month low as surging mortgage rates and supply chain issues boost housing costs. Demand for homes is strong, but as the Fed raises interest rates, some analysts are pointing to signs of cooling down in the housing market. Here to break us down is Tim Rood, managing director of SitusAMC. Tim, is the housing market just starting to see some pullback, maybe a little bit of a cool down?
Hi, nice to see you. I mean, you're seeing a relatively cool down, but I mean, again, from a very low base. If you think about it, like if you start talking last year, you used to have days on the market was about 15, and now it's up to around 18 or 20. Again, hardly a cautionary tale. You're seeing actually that values have gone up 10 to 12% already this year, and they're expected to go up probably another 5% by May, June timeframe. Yeah, home builders are just in a pickle. I mean, they've got insatiable demand. Their starts are at 50-year highs. So you've got like 1.8 million starts. However, they're only able to deliver about 1.3 million in a year. So from a builder perspective, you're like, if you're an investor, and the reason you've seen those stocks get just their faces ripped off is because, look, I've got to carry these properties, right, until I can sell them. I don't get paid until I actually complete it and sell it. So if starting it doesn't do me a whole lot of good, I have to wait, almost twice as long now to complete a property than I did before COVID. So I'm taking these losses on a quarterly basis. And now investors are getting anxious by saying, hey, look, the tail risk on this, if you go out to 2023, where you've got all these properties that you're trying to get completed, who knows what that market's going to look like? If it softens, then you're going to have to lower prices. Then you're basically going to be looking at trading below book value. So I think that's where you're seeing the anxiety in builders. And the problem with that, of course, is sooner or later, builders are going to say, you know what, I get it. I'm going to stop starting new homes, and I'm just going to focus on the backlog. So come 2023, all this extra inventory that we desperately need isn't going to be there anymore.
And I was just going to say that's the exact irony of the problem itself. We don't need them to stop building because the inventory levels are so low. We need them to ramp up building even more. But if those barriers are there, it's why we find ourselves kind of, in this pickle, and in addition to the home builders kind of being in that pickle.
Yeah, it's a vicious cycle too. Sorry, go ahead, Lisa.
No, continue.
Well, one thing to add is it's a vicious cycle because that has a trickle down effect on lumber companies. So if you're a lumber mill, you're like, okay, so I furloughed everybody at the beginning of 2020. I shut down the mills. I didn't want to be producing because I didn't think that we'd have any demand going into a Great Depression. Now I've got, again, huge demand. I'm actually got my capacity back up where we're able to actually, meet the demand, but I can't get it to the people who want it. So, right, I can't get it through, ocean freight, rail freight, trucking, any of those things. They're killing them. So now you're seeing lumber companies actually pull back on their capacity to say, hey, look, I'm losing money because I've got all this supply that I can't get in the hands of the builders who desperately need it. So I'm going to pull back. So again, it just contributes to this whole supply issue, at least on the new home construction side.
That supply chain, though, has it been easing up? Is there any signs that that's easing up so that the pressure in that chain from the lumber side to even the home builder side is reduced?
No. I mean, you're starting to see lumber prices came down from the peak. But the problem is that, like the reason you see a lot of starts is because framing materials to get the property just, in the ground, framed out and all that stuff is sourced domestically. It's all the other things that you need to complete the house, HVAC systems, plumbing, appliances, panels, things like that. All of that stuff has gotten overseas. So again, that's kind of like this sticking point that you can get them started, but if you can't get them finished, then you got a pretty big problem.
From the supply side to the demand side, if you're a buyer right now, you're looking at 30-year fixed mortgage rates that have surged, above 5%, the first time we've seen that in about a decade. What does this mean for, potential buyers, also sellers, and just the overall housing market?
Yeah, well, I mean, it does two things. One, it takes some buyers out of the market, of course, because that means the combination of higher home prices and higher interest rates means that basically for the house you were looking at last year, you're going to be paying 25-30% more a month. So that takes some buyers out of the market. And if you talk to a realtor, I had a funny conversation with a couple of different realtors, and they all said the same thing, which is like, oh my God, so you take 50% of the buyers out of the market, so what does that mean? I only have 8 bidders for every house that I have listed? Like, it will be fine. Okay, so don't worry
Yeah.
about that. The other problem is that because of the low interest rate environment from up until 3 months ago, everybody who could refinance refinanced.
Yeah.
So now, if you're sitting in a house, you're thinking, okay, I might move. I've got to dump my 2 3/4 30-year fixed and get into a 5% property or 5% interest rate. And there's no inventory. Where the heck am I supposed to go?
Yeah.
The trend that you see is people will say, okay, the only rational thing I can do, I'm going to leave like these expensive coastal markets or urban areas, and I'll move to like Phoenix. I'll move to Miami, because relative to the cost of New York City or San Francisco or whatever, even
Yeah.
though prices in Miami and Phoenix have gone up 30%, it's still a quarter of what I was paying in places I'm living at today.
Really quickly, before I have to let you go here, I've only got like 30 seconds, but I'm curious. Spring is typically the busiest time of year for home sales. Could we still be seeing families, buying homes at the same kind of pace, or do we see some kind of holding off to the sidelines, waiting until maybe interest rates come down or just prices come down to kind of then further the idea of paying more on the interest side?
Yeah, sadly, it's wishful thinking. I mean, you're seeing inventory inch up every week, which you would expect to see this time of year, but the pace, the velocity of the sales hasn't changed. You're seeing over a third of the properties still go under contract immediately. Okay,
Wow.
and the other properties, as I said, take 15 to 20 days. So anybody who thinks that they're going to walk into the spring buying market now that's going to be different than last year, it ain't. It's going to be as bad or worse for the foreseeable future.
All right, Tim, great insight. Tim Rood, Managing Director of SitusAMC. Really appreciate it.